you're tuned in right now to Market Pulse. We are on to the pulse of the day, checking out and tracking activities on the NGX. And of course, we do have Samuel Ecomi, Senior Analyst with Nairametrics, joining us to break things down. Samuel, it's a pleasure to have you in.
Thanks for having me. Absolutely.
All right, let's begin with Oando, and of course there are a lot of conversation around oil and gas stocks. Oando has been shortlisted by the Trinidadian government as one of the 3 final contenders to take over the country's state-owned refinery. What are your thoughts around this move? And what are your thoughts around this move, and how do you see it influencing activities of the stock on the NGX, today and ahead?
I think it's quite an interesting development, right, on the part of Oando and then on the part of the Trinidad government. So starting from the Trinidad government first, the fact that that's going to help them overturn or has the potential of overturning some of the losses they've recorded. So in recent times, we've got of refinery. Note that before now, they've had issues around selling up, releasing the refinery to other companies in the past, and if this should pull through, that would help them overturn some of those losses and then help improve employment too, to a large extent. Now, bringing it back to Nigeria, Oando has in recent time demonstrated their expansionary capacity. There was a time that they bought an Ajib facility also earlier in the year. And what that means is that it suggests that the company is trying to expand its territories even beyond the shores of Nigeria, and that could suggest an improved profitability going forward. Now, some form of sentimental impact on investment sentiment in the equities market. You see a number of investors wanting to buy shares into Oando just because the expectation is that it would be seeing some level of profitability. So, going forward, China.
I mean, it's been interesting to see how sentiments are influenced with this latest news, even though today we did see it in the red. But we know how news has driven the stock, of late this year so far. It has gained 633% year to date. Do you think there should be any caution, right, with mounting buying pressures on a stock based primarily off of, expansion news and not necessarily off of proven results? Or would you say that, perhaps they translate or they're, related, one assures the other?
It depends on the kind of investors. So there are some investors who think long term. So if you are one of those investors who think long term, then of course you probably want to base your sentiment based on just some of these expansionary plans, because you believe in the next 3, 4, 5 years, profitability will increase, valuation will skyrocket as a result of those expansions. But if you're someone who is thinking short to medium term in investing, I wouldn't expect such an investor to make decisions based on some of these expansionary plans, because of course you want to think about short-term movement, you want to think about dividends payments. But that is not going to happen anytime soon. There's no assurance of that happening. So there's always a need for caution. For long term, of course, expansions almost oftentimes result in increased profitability, even if that is not assured. But again, it depends on the kind of investors, the kind of investor that you are to make those decisions, long term and short term.
I think that's a very important point there, the distinction of your investment goals, whether you're going in short term, long term, and how that should guide you. Thanks for that. All right, let's come to sentiments on the markets, not just around Oando, but at the moment there's a lot of attention on oil and gas stocks, and right now some analysts are saying you can't go wrong with oil and gas stocks right now. What do you agree, and what do you think are the head or tailwinds that you perceive perhaps could drive that sector on the NGX?
I think a number of people are running into oil and gas stocks. Globally, it's not really about Nigeria anymore. It's global. We saw that played out last week also in European markets, and that's pretty much because of the strike of Iran and Israel, and then the lingering crisis in the Middle East, and how that could impact crude oil prices. Before today, we saw crude oil prices, Brent crude, getting close to around $80 per barrel, and if it's seen some form of redress or come on a decline today. And what that means is that you see a number of investors seeing that as an opportunity to record some of those massive gains that we saw some 2 years ago during the initial war between the initial war between Russia and Ukraine, and then the later part of COVID-19, where we saw crude oil prices reaching the $100 mark, and how that also reflected significantly in the profit of many companies in the oil and gas sector. Because Seplat also record significant profit on the back of that, and I think that's what is happening now. So a lot of people are trying to position themselves in this in this sector. But of course, the downside is that what we don't, when it comes to war, you really cannot predict how it's going to end, if it's going to be positive for crude oil in the long run. In the short term, yes, you say that, but again, in the long run, the war will not really escalate to the point of significant rise in the price of crude in the market. And if that happens, a number of people might have shortened themselves by running into oil and gas stocks. But of course, for the short term, I'd say for those who are active traders and want to take position and take profit, it's probably a good buy.
Yeah, thank you for that. I mean, interesting. Of course, again, it boils down to your goals as an investor, short term, long term. Of course, we're seeing oil prices dip of late. We'll see what happens in the Middle East and how that continues to influence oil prices. But of course, macroeconomic factors here in Nigeria, different things happening. There's inflation, there's interest rate hikes, there's exchange rate volatility. What would you say? I mean, how would you say these factors are causing investors? There are some that are saying that it's causing investors to move with caution on the NGX. What are your thoughts on that? And how do you see these different elements, moving, pieces, affecting investor sentiments and the equities markets?
So there's been a lot of offer when you look at the NGX lately. It seems to have found resistance around against 30%. And that's to a day, that's again the other day there's a decline. And that's because a number of people are trying to really measure what's happening in the market. Don't forget that we still have high yielding instruments, the fixed income markets. Yes, inflation has recorded 2 consecutive months of decline. But then again, the CBN went ahead to increase the NPR in the last meeting by 50 basis points, and that, of course, had some impact in the bonds market and then the treasury bills market. Now, if that continues, and with the expectation that the recent hike in petrol prices could also cause some level of uptick in terms of headline inflation for the month of September, if that happens, the chances are that the fixed income market will still continue to become attractive to investors, and then a number of people will, of course, continue to move their investments into the fixed income market at the detriment of the equities market. Not like that's going to have a seat.
Yeah, it's be interesting to see that materialize. But thank you so much for the insights, Samuel Oyekomi, Senior Analyst at Nairametrics. It's a pleasure having you in.
Thank you very much.